Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York on Thursday, May 26, 2016. We're looking at the Dow Jones Industrial Average, which has closed and settled, settling off by about 23 points today. Very, very nominal change to the downside, 17,828. S&Ps, however, did close nominally higher, and that's what we want to talk about, is this most recent breakout that we witnessed in the S&P, because as far as I'm concerned, what we have seen this week is really signaling the strong potential to see us witness yet a new set of historical highs in the Dow, in the Standard & Poor's, in U.S. equities as a whole over this next month, and I'm really excited about it. As I said, 2090 up 275 in the Standard & Poor's 500. Let's take a look at our first S&P chart so you can see on a technical basis exactly what I'm talking about. So traders, granted, we have had light volume, therefore we have had a market that is more susceptible to strong moves with less activity, so to speak. We have witnessed, I believe, a pretty major breakout from recent activity in the Standard & Poor's and U.S. equities. Dynamic moves that we have seen over the last couple of days. Today, not so much, trading up about 2.5 points. But consider this, when we take a look at what we saw on Wednesday, yesterday, and on Tuesday, this tremendous rise up, it tells me on a technical basis that we have broken above what was a resistance area that was really formed by simply drawing a trend line through the most recent highs in the market. The recent high here that I'm labeling as a B wave, and of course this top here that I'm labeling as a fifth wave. So that when this market traded under our 50-day moving average, that was a moment in which we really had to reflect on whether or not we would see this market go into some sort of corrective stage, because traders, when we consider the fact that back mid-February we had the S&P trading at 1,800 and is now trading again close to 2,100, this top that we achieved in the middle of April, the correction that we've had has been relatively mild. As I said, a 38% retracement takes us to 2011. So with that in mind, we broke back above that 50-day moving average. Of course, we talked about the fact that typically when the short-term moving average crosses above the long-term moving average, which is what occurred right here, that golden cross, that would signal a dramatic rise in price. And it certainly, in this particular instance, absolutely did not, because at the point in which we saw the golden cross occur, of course, which is right here, and then we look at the activity that subsequently followed the market, we had that slight rise, almost, well, call it pretty much an even market. Then the market dipped and then traded not only once, but 2 times broke below the 50-day moving average. So the fact that on Tuesday of this week, A, we broke above the 50-day moving average. B, we broke above this resistance area created from these upper level highs that we got. And then we take into account the potential for the model that I've just put up, in which what we're looking at was a 1 through 5 move to the top. We go into some sort of a correction, and we could have at this point seen an A, B, and a conclusion, or a C correction. It would be obviously categorized as a flat in that A and C had equal lows, but we are back above our 50-day moving average, and more importantly, we're back above this standing resistance. So what does that mean for us? Well, as we come to a close on this week, I'm not very enticed to take a position on before a 3-day weekend. However, I believe that any sort of dips that we have next week are going to be phenomenal opportunities to enter the S&P. And at this point, my target is not 2,100 anymore. It is not 2,150, but I believe over the next couple of months, with the information at hand and the technical momentum that's been building in this market, really from the better part of this year, and it's hard to believe that as we go into next month, we're at that halfway point in our year already. either I'm getting old or time seems to be moving very, very quickly, or a combination of the both. But it's hard to believe we've already gone through close to half a year. My sense is that we're going to pounce for new highs in the market, and I think as high as 2160, maybe even 2200. And in other words, what I'm looking for is a potential for a new historical high in U.S. equities over this summer period if we continue with the kind of steam and momentum that we currently have. So I think we're going to be in for extremely exciting times coming up. I think the Standard & Poor's is going to give us opportunities to really ride this next historical wave to the upside in U.S. equities. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review before the long 3-day Memorial Day weekend. Bye-bye.